names, almost not going to be FAANG for much longer, even though Meta has not changed its ticker. I have heard that maybe the Meta name is being freed up so that they can take that name. But for now, we still have the FAANG stocks, and Netflix is the first one leading us off during this earnings season. So I wanted to take a deeper dive into what's going on behind the scenes with the FAANG names. What does the earnings charts look like? What do their earnings possibilities look like? Let's dive right in and see who is the best of the FAANGs and what's really going on there. So we're going to lead it off with Meta, ticker FB for now. And as you can see, they've beat 6 quarters in a row. It's been a nice little streak here because they can be kind of hit or miss. But over the last year, these shares up 32%, quite a nice little run. They have pulled back off those highs, however, after they announced they're going to be spending billions of dollars to go into the Meta. They did the name change, and that's really going to hit on expenses and going to hit the earnings as we go forward. And what do those earnings look like? Here's a better look at what the earnings actually look like. So 2021 is here. They had the big gain during the pandemic here. And then 2022, suddenly the analysts had to bring it all down because they announced this big, spending push to go into the Meta. Also for 2023, you see the analysts adjusting there. However, you're going to see a little bit more earnings growth in here, at least for now, between 2022 and 2023, as the analysts try to figure out like what's going on and what's going to be happening in the future. However, on the revenue side, the analysts believe that Facebook or Meta is still going to be doing the double-digit revenue here in 2022, looking for 18% revenue growth. It's just going to be on the earnings side, almost flat earnings compared to 2021. And that's what has people a little bit spooked because nobody likes to pay for basically no earnings growth. So these shares, not super expensive here, trading about 24 times. So it's not as cheap as it's gotten in the past. It did get down to around 20 times when all the privacy issues were hitting. But this one, not super expensive as far as the FAANG stocks are concerned. Then let's switch it over to Apple. So this one hitting new all-time highs here in 2022, $3 trillion market cap. As you can see, it's got the perfect track record. It's the only one of the FAANGs to have a perfect track record. So everything is smelling up roses or coming up roses with Apple on this chart. But it's this one that really has me concerned and why I'm not a big Apple fan here. So outside of this weird data issue that's showing that going down, you can see 2021, they did see the big earnings growth here. But 2022, look at this light blue line just above here. It is basically almost flat with 2021. And that's because earnings aren't expected to do very much here in 2022, fiscal 2022. They're only expected to be up 3.7%. And then even 2023, only another 7% here. And the same story on revenue. Fiscal 2022, just a 5.3% revenue growth. Fiscal 2023, 6.5. So this is a single-digit growth company now, single digits, and it's trading with a forward PE of almost 30. Has pulled back a little bit, used to be about 31 times, but still trading at almost 30 times for almost very low growth here. That would normally be a value stock type of scenario where it'd be trading at, 12 or 13 times, not 30 times. So that's the big question with Apple. How much are you willing to pay for those earnings? Right now, the street is saying we're willing to pay an all-time high for those earnings. But will that be true going forward in the rest of 2022? We will see. Then let's switch over to Amazon. So this one has put together a very nice streak during the pandemic. It did miss last quarter, as you can see with that red arrow, but prior to that, it was mostly beating during the pandemic because we're all shopping. We're all ordering everything still off of Amazon, and business has been great. So that I'm not concerned about. But what's happening on the actual earnings side? Amazon here looking much better than some of the charts I just showed you, right? This is what you want to see. You want to see year over year steady growth, and you want to see that increasing. So we have seen some of the analysts starting to lower here for 2022 and 2023, not quite as bullish as they were when these estimates first came out in the middle of last year. That would be normal, right? Especially as we're in the Omicron outbreak and the pandemic is still ongoing. Still, we're going to see earnings growth of, a decent percent here in 2022, and that's expected to be up 22% here in 2022. Revenues also expected to be up another 17.6% in 2022. So Amazon's not having any issues on the growth side, but these shares are up only 4.5% in the last year, and they've just been in this narrow trading range. So we haven't seen any of those headlines of, Jeff Bezos earns $5 billion today as the stock is surging, really, because it really hasn't been going anywhere. So this is one of the worst performers of the FAANGs over the last year, despite the earnings doing far better. And you know what that means? That means some, PE, the contraction is happening there as the earnings continue to rise, but the shares are going nowhere. So Amazon is actually cheaper than it's been in at least over a year. It used to trade about 89 times forward earnings. Right now it's trading at 65 times. Yes, that's still the highest of the FAANGs, but for Amazon, that's among its cheaper PEs in recent memory. So the PE is coming down because the E is rising, but these shares aren't going anywhere. That could mean some good things here in 2022, but this is definitely one I'm going to be watching. Then we're going to switch over to Netflix. Now, I'm showing you this chart because I'm having a bit of a trouble with the other chart. For some reason, we have a data error. So I just wanted to show you what it's done over the last 5 years. So Netflix beating the QQQs over the last 5 years, still one of the top, if not the top stocks of the last 10 years and even 20 years. It ranks up there. So this is definitely one that's been hot. It's beat 2 out of the last 4 quarters, and it did miss last quarter. So that was, a rare miss of the last quarter. Oh no, I'm sorry. Yes, it's beat 2 out of the last 4, and it beat last quarter. I'm sorry, beat by 24% last quarter. And so it's kind of hit or miss on that earnings beat, but nobody seems to care over the years. And what does those earnings look like? Now, we're still having data error, but I wanted to show you because this is the perfect price and consensus chart. It's just growing those earnings year after year on a very steady basis. The analysts are not lowering. If anything, they're raising a bit. See, they raised a bit here in 2021, but nothing dramatic. So the story remains the same. They just raised the price for Netflix. It's going to increase here in 2022. So that should help with margins and their cash burn to make all that great content. So Netflix still producing year after year. Earnings expected to be up 23.6% here again in 2022, and that's after a 76% gain in 2021. So that's all looking good. Over the last month, though, however, if we go back to that other chart here, the shares are down 13%. So we see this little bit of sell-off here, maybe creating a buying opportunity. It's still expensive on a PE level. It's trading about 40 times. But that's about where Netflix has been over the last numerous years. It's never been an altogether cheap stock in recent memory. So it's got the earnings growth and it's got the high PE, but on a further pullback here, it could be interesting for investors. Then we're going to wrap it up with Alphabet, ticker GOOGL still. Most people still call it Google, but it is, of course, Alphabet. And it has one of the best track records during the pandemic of anyone except Apple, who of course has no misses. Alphabet used to not care about a beat or the miss, but now they've put together this very nice 6 in a row track record. And over the last year, these shares up 61%. It is the best performer of the FAANG names by far. Over the last month, however, down 4.8%. And then I looked at the last 3 months and it's down 1.3% as it's kind of peaked here and it's just kind of treading water. So are we going to get enough impetus for it to move even higher once again? Or is this going into somewhat of an Amazon type trajectory over the next, 3 to 6 months? I don't know. Let's look at those earnings. That might give us a clue. Okay, this looks pretty good. Not as good as Netflix, but better than some of the others. You see here in 2021, we had this big gain up as those earnings did jump considerably in 2021, with earnings actually rising 85%. So it's going to be hard to lap that, right? But 2022, you see a little bit of earnings growth here. For now, it's just about 5% is what the analysts estimate. But 2023, you're getting this another big jump up here. So that's good to see. And we'll see after this earnings report if these numbers hold. Because again, advertising, their big business, and we'll see with travel returning, which is also a big side of their business, what's happening with the cloud and some of its other divisions. But Alphabet looking pretty good here on the chart. How is it on the PE ratio? It's trading about 24.5 times. So surprisingly, because that E has been on such an increase, it's actually among the cheapest of the FANGs and has been for several years, especially back here where it was increasing, it was going up, but not as big as what we've seen here where the shares have really taken off. But so have the earnings. And can they keep up that double-digit revenue growth? Can any of these guys at this size and this massive size of companies able to do the double-digit revenue growth? Alphabet's been doing it for well over a decade now, and revenue expected to be up 17% here in 2022. Can they do it? We will see. I'm sure many of you own some of these FAANG names. I do. I own Meta, Amazon, and Alphabet. I do not own Netflix or Apple. I've never owned Apple. Yes, I know I'm one of the unusual ones, right? Other than it being in an S&P 500 or a triple Q fund or that kind of thing. I don't own it as an individual company, but that doesn't mean I'm not watching all 5 of these names here in this earnings season. It is another key earnings report as we're going to get some guidance into what 2022 is going to look like for these big, massive companies. And as I said, can they keep doing it? Can they keep the double-digit revenue growth? Apple's already indicating no, they cannot, because they're not expected to do it. But can the others keep up this high flying ways, and can these stocks stay near their all-time highs? We will see. These are big, important questions to ask this earnings season, and I'm going to be bringing you all the earnings charts for all the companies, including the rest of the FAANG mans, the other ones, Microsoft and the other ilks, all during this earnings season. So be sure to subscribe to get all of our Earnings All-Stars videos. You can get them on Zacks.com/YouTube, and follow me on Twitter. I'll be tweeting out all of these charts that you saw here today and more all throughout earnings season. So I'll see you again next week with some more earnings charts.